Today is the 8th of October, Friday, and we'd like to welcome you again to Megatrade101.com's video presentation. With the non-farm payrolls out of the way and the disappointing numbers of 95,000 jobs basically lost, paved the way for the US dollar to still continue at the price levels right now at 77.29 with a low of 76.95, which happens to be the bottom price of this bar and this bar on the way up. However, the disappointing numbers, which has been expected, although 95,000 compared to expectations of 25, have been the trigger for the dollar to move lower. However, there was a slight recovery simply because of the technical basis that it is on the oversold area before the news came out. With all negative sentiments pointing to a dollar decline and the major trend for the dollar to still continue lower is still intact. However, the downside would be looking at 76.50 level, although the 76.95, 85 to 95 range would be something to look at simply because of a supportive psychological support price at those levels. This market analysis is a follow-through analysis of our two previous video presentations on trending the US dollar, comparing it with the euro, the cable, the cross rate on the euro pound, and now including the Canadian dollar. As you can see here on our four competitive charts, let's start off with the euro, currently at the price level of 139.17 from a high of 1.3983, although looking at it on the previous day, it did touch 1.4028 and some sort of a resistance was triggered. That is why there was a pullback, and currently with a double dodgy formation, that is if it closes at this price levels at 1.3916, the probability for it to correct is actually in the making. However, there are no real confirmations of this simply because even if you look at the angle or the steep angle of acceleration, not only on the daily, including the weekly and the monthly, most especially, that it is forming a V-shaped formation. So relatively, the trend for the euro against the dollar is still intact with some corrective movements that should be able to adjust for the overbought areas. Now looking at it here, more especially on the 4 hours, where you could find a typical left head shoulder with a hanging man. That's why it retrieved lower, a spike formation or a higher right shoulder, moving lower to as low as 1.3841, which was the correction, where the overbought area on a technical basis adjusted, continued higher. Let's see if we can get the prices here at 1.3983. And since this is a 4-hourly chart, you could see that the tail up is actually significant. However, you have to be able to see and determine if you adjust your prices or price ranges, so you would be able to visualize how it looks more on a technical basis. Again, this is on a 4 hourly charts, where on the price is down here, collaborating with slightly higher volumes and lesser momentum, which actually triggered some adjustments simply because of the non-farm payrolls everybody was actually waiting for. So looking at here on these levels, on a 4 hourly charts, on a daily, the major trend is still up with major corrections as it is going to move lower on a day-to-day basis. Comparing it with the cable here, as you could see that it also has a steep angle of acceleration, not only on a daily, a weekly, where it is touching the high price level of 1.6016 that it did for the week, coming from a low of 1.5747, which is actually, if you look at it on a daily basis, is right on the trend line, where the 1.5821 trend line is actually the psychological and technical support price, where you not only have 1, 2, 3, 4, and 5 support prices that would level off, and a strong support for the major trend to move higher is still intact. Looking at it on a weekly basis is the same, also with a V formation, but more importantly is the monthly, where you could see that it's still obviously intact. However, there is a significant resistance here at the 1.601620 level, where it's going to meet. But like I said, if you look at it here clearly, even on the stochastics, it's still open. On the RSI, it's still on the 54.56 level, which is has still rather, excuse me, more room to go higher, which actually would lead to the prices would correct slightly, but the major trend is still intact. With the cross rate euro and pound, you could see that because of the same formation here on the DAW-G, comparing it with the euro, is actually making the euro pound slightly meeting a resistance, especially the price levels of, let's see if we can get it at 88.04, although the high here is at 0.8768. There you go. But here on a daily basis, based on yesterday's high at 0.8804, looking at it on a weekly, now when the price is close at this current levels of 0.8725 on a weekly basis, then there is still a possibility that a correction would be in the making. However, the opening price for next week, if it opens higher than the closing price of Friday today, then more likely the continuation to move higher, meeting again the same resistance price level before it moves lower. Now, looking at this scenario, the US dollar has indeed had a very heavy influence for the euro, the pound, as well as the cross rate. And more importantly, now comparing it with the Canadian dollar, it is working at the price level of 1.0122 with a low of 20, and more likely that its parity level would be made, if not at the end of the closing, next week would be more likely it would. The same thing that it happened with the dollar yen at 81.80 level, and no such intervention from the Bank of Japan, frustrating a lot of analysts and traders, hoping an intervention would lead to a correction on the dollar yen to move higher. But with this analysis, we would like to say thank you very much and hope that your trading has been well and good luck. Some due diligence is quite important, especially when you're trading the foreign exchange market. Thank you very much and have a good day.